So honored to have you this evening and appreciate you taking the time. Welcome back to Get It with Atarah Solutions. Get It Right with Atarah Solutions, where we seek to demystify issues in entrepreneurship and employment. This is our third session of season 2. That means we are on the 29th episode of Get It Right with Atarah Solutions. Ooh. This session is brought to you by Balcon Housing and Stallion Construction Company Limited. I am Grace Zula, trainer and HR consultant with Atarah Solutions, an HR consulting and training firm that provides total HR solutions to employers and employees. At Atarah Solutions, we help employees who are seeking to improve their performance in their workplaces and those looking for job placements. We also assist employers implement HR systems, upskill their human resource, as well as find good talent. So if you're looking for any of these services, kindly get in touch with us on info@atarahsolutions.co.ke and we will be able to serve you. Get It Right with Atarah Solutions is a webinar series that seeks to demystify issues in entrepreneurship and employment. So if you're tuning in for the first time, we do this every Tuesday from 8 p.m. to 9 p.m. and karibu sana. And then if you have missed any of our webinars, we have uploaded them on Get It Right with Atarah Solutions YouTube channel. Kindly go and catch up and please subscribe and click the notification button. Did you know that 22% of businesses fail in the first year? So last year we sang this song, and you can imagine that the businesses that started in January 2020, 22% of them did not see the end of 2020. And I want to believe that this number has changed because you all have been taking this session seriously and you have been implementing the solutions we are proposing. 30% of businesses do not see the second year, so I'm hoping this number will change this year. 50% do not see their 5th anniversary, and 70% don't see the 10th anniversary, and this thing has to change. We have decided to make sure that we give you as much information as possible so that at least we reduce these numbers. As always, we have giveaways from our partners. This season or the last couple of episodes, our giveaways are coming from Kapula Mintito. I repeat, Kapula Mintito, Kapula Mintito, Mintito. You can check them out on Facebook and Instagram. They have recently gotten a stockist in Nairobi, so they're based in Mombasa. But if you're looking for mapochopocho, your cashew nuts, your mabuyu ya Mombasani, your honey, among other things, kindly check them out on Facebook and Instagram. They're called Kapula Mintito, and place an order. So, and you stand a chance to win by just tuning in to us. So we would like to appreciate our media partners, the guys who are partnering with us last week to bring this session to you live on Facebook and on YouTube. So thank you very much, Graphics Broadcast Media. If you're looking for people to do your videography, to wear whatever event you may have on your YouTube and Facebook, kindly get in touch with Graphics Broadcast Media. You can reach out to me and I'm able to hook you up. I promise that we'll have interesting sessions this season. So next Tuesday, we are hosting someone who will take us through their career journey. We also have someone who will come and explain to us how to explain our career gaps and the CVs, and this is for job seekers. We also have someone who will come and help us collect the pieces. All this is happening in the month of May, so stay tuned. As I said before, today's session is brought to you courtesy of Balcon Housing, a real estate company incorporated in the year 2001. The company has successfully sold many parcels of land in different parts of the country. They provide both residential and commercial land for investors, individuals, and groups. So if you have your chama looking to invest in land, talk to Balcon Housing. If you're looking for land to put up an industry, talk to Balcon Housing. And if you just want to invest in land for speculation or for whatever, build a home or something, please get in touch with Balcon Housing. They also offer property management services. So if you have a plot somewhere that you build your rentals and stuff and you're looking for people to manage it, kindly get a hold of Balcon Housing. They have a broad asset expertise complemented by their comprehensive property management services of mid to large scale properties. So you can check out Balcon Housing. They are on Facebook, and as well as if you need more information, you can always get in touch with me and I'll be able to hook you up. Always, we also have the partner Stallion Construction Company, a construction company based in Nairobi. So if you're looking to put up a building or do your repairs or something, kindly get in touch with Stallion Construction Company. Allow me to define to you, because when we sent out the flyer, somebody asked me, what is MSME? So last week we had James who said that sometimes you can define them by the number of employees, and allow me to use that data. MSME stands for micro, small, medium enterprises. I repeat, micro, small, and medium enterprises. And for micro, they have between 1 to 9 employees, so you can start placing yourself. Small have 10 to 49, and medium have 50 to 100. So whatever we are going to learn today, the focus is on them. Obviously, if you have more than 100, around 200 or 300, who doesn't pay taxes in this country? Right. I am honored and privileged to introduce our speaker of the day, Madam Monica Geduba. I hope I got that name right. She is a tax expert. I would like, first of all, to appreciate the whole KRA team who have partnered with us and to bring this information and ensure that we are doing the things the right way and we are not afraid of facing KRA. So, asante sana Monica for choosing to do this with us, and we really, really appreciate. And I know there's something that has really been doing rounds. There's this thing of the registration of PIN. And allow me to just start with that. Is it still valid? And what's really happening? Why? You know, this is the question I've been getting all week.
Mm-hmm.
So please, give us more. Yeah.
So thank you, Grace. So that the notice that went out about the registration of PINs was cancelled, but the reasoning was that when you get a PIN number, there are certain obligations which you're supposed to account for. So of course we're going to go into that and you're going to understand further. And we hope by the end of this session, the question that is asked, what does KRA want from MSMEs, will be answered. So let's go straight ahead to my presentation for the day and kindly ask any questions that you may have.
Yes, please make use of the Q&A session. I mean, tab on your Zoom as Monica shares her screen.
Okay. Just a minute.
That's fine.
I don't know why it's not picking my screen. Let me share. Okay. Okay. Okay, Grace. Okay. There's a slight issue. It's not picking my screen. I don't know. Could you kindly share from your side?
Okay.
Yeah.
but did we get right the introduction for MSME, right?
Yes, you did. Yes, you did. Yeah.
Okay, because sometimes we may not get it right in KRA terms.
We're going to see that as we continue and have answer any questions that come off that topic, because I know there are people who feel that they maybe don't understand the type of taxes that they're supposed to pay and such, but we hope you'll be able to answer that.
Yeah, there we go.
Okay. So we start off with this disclaimer. Of course, we endeavor to give you the most correct and up-to-date information, but please note that in case of any errors, then the revenue law shall prevail. We can just go straight ahead. Areas of topic today, we are going to cover a brief introduction into our tax system and the types of taxes. We're going to look into taxation of business income. We're going to also look at M-Service, which is an app, voluntary tax disclosure program, and finally, integrity and access to information. Okay. So in our introduction, we're basically trying to help a taxpayer understand that when you have a business idea, then there are certain requirements from you. And one of these is to decide, how am I going to operate? Am I going to operate as a sole trader, as a partnership, or as a company? So for the sole trader, you're going to register a business name, and your PIN number and the PIN number of the business name will be the same. When you get to the partnership itself will get a PIN number, but also the partners will now be required to account for their share of income or use their share of income to determine the tax due from them. For the company, this is an artificial person that you form, that is a separate entity from the individuals who form it. It has its own PIN number, and you're expected to now account for its income under that PIN number. So the question now you could be asking yourself is, am I a sole trader? Am I in a partnership? And how will I share the profits? Is it 50-50, 60-50, 60-40? And that's the same ratio that you're going to use to determine your tax liability. For the company, we are going to see that the tax rate is at 30% if you're in the annual tax system. So next is the types of taxes. The tax cycle, sorry. So for the process of PIN registration. So you as a taxpayer in Kenya are the one who engages and starts this process. You decide you want to start your business, you've registered it under the systems that we have, and now you want a PIN number. You must visit iTax, that is our online system, choose new PIN registration, choose an individual depending on the mode that you're operating, fill in your basic information, select your tax obligation. For the tax obligation, you need to be very careful because every obligation that you choose tells KRA that you're expecting a certain income or you're going to be generating certain income. For example, if you choose pay as you earn, it means that you have employees and now will expect pay as you earn after that. So somebody is telling me to check my internet. Can you hear me?
Yes.
Yeah, okay. After that, enter the details of the company or directors and submit the application. After you get your PIN number, now we go to the tax cycle. The tax cycle is a process that any taxpayer engages when they come to KRA. So first of all, register as a taxpayer, get the PIN number we've talked about, choose your tax obligation, give us a physical location that is close to you, and get your PIN certificate. After that, you must now check, what obligations do I have? And each obligation that you have requires a return. A return is your communication to KRA saying that for this tax period, be it a year or a month, this is my income. You find that each tax obligation has a due date. Some are monthly and some are annual. So there are returns you need to file monthly and there are others you need to file annually. So self-assess and file the tax return. Tell us, this is my income for this period. So this is the tax due from me. After that, pay taxes as they fall due. The due date for filing the tax return is also the due date for paying the taxes. Ensure you file on time, you file and pay on time. And in case you have issues, for example, you're not able to pay, you can request for a payment plan via your iTax profile. After that, we deal with any matters that may arise. We have refunds where you have overpaid, or maybe you need waiver of penalties and interest, you request the same. That's just the basic tax cycle you follow: register, self-assess and file the tax return, pay taxes as they fall due, and then deal with any matters that may arise. Next is now taxation of business income, which is our focus today. Or the types of taxes first. Types of taxes, to understand taxation in Kenya, understand that the government wants to collect taxes from income and consumption. Sometimes it's taking these taxes from the direct income that you generate. This is what we call direct taxes, payable from taxable income. As a business person in Kenya, you know that because I'm generating income, I need to pay taxes. This is what is called direct taxes, that is coming from the income that you're generating from your business. As an individual in employment, the direct tax you pay is paid under the pay-as-you-earn system. It's accounted for by your employer, but paid from your income. That is what we call a direct tax. An indirect tax is where the business person collects the tax from collects the tax from the customer and remits the same. So this is where the government is targeting consumption. But who is the link between the government and the consumer? It is the business person. You who has set up a business in Kenya becomes liable to collect and remit these taxes as part of the supply chain that gets the taxable good or services to the final consumer. So you find here there is a VAT and excise tax, value-added tax, and also excise tax. Today, our focus will be on the direct taxes, especially under business income. But of course, we are going to arrange for other sessions on VAT and also excise. We have other agency taxes, for example, pay-as-you-earn. Pay-as-you-earn is from individual, but accounted for by the employer. So as an employer in Kenya, you know that you're supposed to deduct pay-as-you-earn from your employees and remit the same. Those are the taxes that we collect within our domestic taxes department, and our focus today will be direct taxes, the one that you pay from your business income. Now we go to accounting for business income. We are guided by the Income Tax Act. Again, for any taxes that we collect as KRA, we have to be guided by an act of parliament. Here is the Income Tax Act, and it defines what is business income. So business income is where you operate a business, whether wholly in Kenya or partly in or partly outside Kenya. Partly in and partly outside means that you maybe have a transport company where you transport goods outside Kenya and you generate some export income. In determining your taxable income, we are going to both use the local sales plus the export sales. So remember that whether you're operating a business wholly in Kenya or partly in and partly outside Kenya, then both the local sales and the export sales are deemed to be income derived from Kenya and thus taxable here. We have two options or two modes of accounting for this tax, either the annual tax regime or the turnover tax regime. And remember here, this is key, that we have two systems of accounting for business income. You cannot be in the two systems. You're either in the annual tax system or the turnover tax system. So let's see what the annual tax system is about before we go to our option 2. Annual tax regime, as the name suggests, this is an annual mode of accounting for your business income. And annual means 12 months period. That means that you add your income for the year versus allowable business expenditure and find your taxable profit. What this means is that for a business, let's say you have, let's use the example of a hardware. They're going to add the income they have generated for the year. Let's use the year 2020 as our sample. They take their income for the year versus the expenditures they've incurred to generate this income. The Income Tax Act that we talked about talks about what is an allowable expenditure and what is non-allowable. The allowable expenditures are those you have incurred, wholly and exclusively incurred to generate the said income. So for example, for the hardware, the expenditures we expect are those that are related to the hardware income. And this is in line with matching the income versus expenditure. We want to determine the taxable profit so that we can apply the rates of tax. So annual income versus allowable business expenditure, find your taxable profit and apply the rates of tax. This is based on profitability. You only pay taxes when you make a profit. When you make a loss, you carry it forward to the next year. But because it's an annual system, you're allowed to pay your taxes or required to pay your taxes in installment. That means that, for example, in this year, 2021, there is some taxes of 2021 that you're expected to pay. But because the year is not yet over, it will be an estimate. So paid by installments, and these installments are estimates. There are two ways of determining installment taxes. One is the current year basis, and the second one is last year's tax liability grown by 10%. So remember, if you're in the annual tax system, this is a system based on profitability, but taxes are paid in installments on or before the 20th day of the 4th, 6th, 9th, and 12th month. I know this becomes very confusing for some taxpayers, but we are going to see that it's as simple. We're going to go to a calculation that is going to show us that this is quite simple. So tax returns are filed on iTax once per year. IT2C is the company return, ITP is the partnership return, IT1 is the individual income tax return. That means that the return you file in 2022 is the return for 2021. In 2022, you're going to file that return in 2023. So remember, the return we are filing this year is for last year, accounting for last year's income. But you'll have paid part of your taxes via installments. And then when it comes to the current year, you do your books, find your actual tax liability, and reduce that with any installment taxes you've paid to pay the balance of tax. As you can tell, this is a system that requires that you know how to prepare your profit and loss account. And if you're a company, you're going to need an auditor to audit the books, prepare a balance sheet and such. And we're going to see how the law has been enhanced to capture most of the MSMEs who are not savvy with those systems we've talked about. We say taxes are paid by installments. And here we are going to use an example of the current year to determine we've said there are two modes, last year's tax liability and current year basis. Current year basis means that you do your books per quarter and determine your actual tax liability. Most people use this method of last year's tax liability. So our sample year is 2021. We want to determine the installment taxes payable this year. So what we do is take our last year's tax liability. In our example here, it's 100,000 Kenya shillings. Increase that by 10%, get 110,000, divide by 4, get 27,500. That is your installment tax payable on or before the 20th day of the 4th, 6th, 9th, and 12th month in this year. Remember, those are 2021 taxes in 2021. Come 2022, you're going to do your actual books. Take your income, annual income versus expenditure, find your actual tax liability. And then you're going to reduce that with the installment taxes that you've paid in the year. So in this case, 900,000 minus 110, the taxpayer is supposed to pay the balance of tax of 790,000 by the last day of the 4th month in 2022. So that is installment taxes. Remember, the 110 is an estimate based on last year's tax liability grown by 10% divided by 4. Actual tax liability minus installment taxes already paid, you get your balance of tax paid by the last day of the 4th month in the coming year. So returns are filed 6
So
months.
this one was supposed to be paid on the last month
of 2022. So that's
next
next
year.
year.
Okay.
Yes.
Yes. April next year.
Pay,
Generally.
yes.
Yeah. Okay.
Because we're using 2021 as our
Yeah.
sample year. Yeah.
Okay.
And now you do your books in 2022. You pay the balance of tax, and then you file your returns within 6 months after the end of your accounting period. If your accounting period ends in December, then that means your return is due by 30th of June. If it ends in another month, for example, April, then you must file your return within 6 months after that end of your accounting period. Yeah, okay. So this is just an example of how to determine the taxable income under this system. We had the gross income for this taxpayer is 3.5 million, 3.55. Then we have allowable expenses. The allowable expenses, we said, are expenses that you've incurred to generate this income. We have salaries and wages, insurance for the business, legal fee, rent, loan interest, electricity bills, wear and tear allowances, fuel expenditures. All these must be expenditures that were incurred to generate the income, and you must be able to support them. So if you're not able to support the expenditure, then we disallow them and raise an additional assessment on you. So remember that you have to also fully declare your income. This 3.55 must be supported by your sales records. If we have the wages and salaries, it must be for employees who are in this company. If we have some legal fee, it has to be of a matter concerning that business. So ensure that you have records for this, and the Tax Procedures Act requires that you keep records for at least 5 years. So in our example here, we see that this taxpayer has incurred some expenditures, and they have a taxable profit. Can we move down just a bit? I can't see the final part. Yeah. So net taxable income in this case was 3 million, and we are assuming they are company, so the tax rate that they pay at is 30%. 30% of 3 million is 900,000. This is their actual tax liability. But as per the example, they have paid something over the year. This something is 110, and now the only amounts that are required from them are 790,000, or is 790,000. I hope that's clear in terms of the annual tax system, and you will need an accountant to help you with this, profit and loss accounts, the balance sheet, and all these books to know what is an allowable expenditure, what is non-allowable, and such. And that just summarizes the system that we have. In case you have questions on that system, kindly write in the chat as we go to our option, as we go to withholding tax, which is part of the annual tax system. So withholding tax is an idea where some tax is deducted at source. So you find that to implement or to ensure compliance, the law has stipulated that certain incomes are subject to withholding tax. So when a person is making this payment, they are required to withhold some tax from this. This is not final tax, and we're going to see why that is the case and how to account for the rest of the income. So if it's subject to why withholding tax, most people are going to ask, why do I need withholding tax? Or why withholding tax? It assists the government to manage cash flow, for example, because when money is withheld at source, then the government is already liquid because the money is coming in earlier than it would have come. Ensure tax compliance, because, for example, if somebody provides you with a service, a professional service, we might not know about them. But when we say that you must deduct some tax from them, then you already have information that they are operating and they are generating taxable income. When they come to file their returns, they can now no longer say it's a nil return. They are going to have to declare the income. It's a cost-effective way of tax administration, because you said in Kenya we have a self-assessment system where you assess yourself and tell us, this is my income, this is my expenditure. So this mode is cost effective for both people, because now we can know who is offering certain services, who are the non-residents operating in Kenya, and are they paying their taxes. Ensures that tax paid is by non-residents and provides data for essential and planning and policy by the government. That is just a case arguing for withholding tax, because I know most people find this as a painful area that they don't understand. If tax was deducted at source, then why do I need to further account for this? Next. So we said we have to be guided by the Act, and the Income Tax Act, Section 35, says that an agent or a person making certain payments subject to income tax is required to deduct tax and remit the same. So when you receive certain services which you are going to see, then you must deduct this withholding tax, mostly at 5% or 3%. When you deduct this, you pay it on behalf of the person you've deducted from. For example, if I provide you with some professional services or some consultancy work, then when you're paying me any amounts above 24,000, you're supposed to deduct 5% and pay this to KRA, but you're paying on my behalf. So it's going to go into my ledger as a credit. When I come to do my final tax computation, I already have some tax paid at source. So all I need to do is now pay the balance of tax. So it's claimable by the person whose this money is deducted from. The next. These are the incomes, certain incomes that we've talked about, where liable to withholding tax. We have managerial services, professional services, where you offer training services, appearance to perform or to entertain, contractual fees, legal fee, audit fee, royalties. So all these incomes are subject to withholding tax. The managerial, professional, training fee subject to tax at 5%. We have the contractual fee at 3%, legal fee 5%. So mostly you find that you provide this kind of services and tax is withheld from you. The person withholding is doing the correct thing. They are remitting this tax on your behalf, and we're going to see how you get a credit of the same. Next is for the 5%. And for the person who withholds, they must pay this by 20th day of the following month. So let's say you deduct in January, we expect that you remit this money on or before 20th day of the following month. If you fail to do this, then it means that you will be penalized. There's a late payment penalty of 5%, and also the amounts accumulate interest. So remember, when you deduct these amounts, they must be remitted on or before the 20th day of the following month. Yeah. This is a tax computation now for the person who is in the business of providing consultancy. You know that you must pay under the annual tax system. So you take your annual consultancy fee. In this case, it's 1.5 million less your allowable business expenditures, the expenditures you've incurred to generate this income. In this case, that's around 700,000. You get your taxable profit at 800, get tax at 25%, that is 200,000. That is what you would have paid if there was no withholding tax. But you have some credits of withholding that was deducted at source. So tax payable is 200,000 minus your total credits, you pay your balance of tax of 125,000. So for the persons who are offering these kinds of services, know that the withholding tax that is deducted is not final, and you need to account for the rest of the money. Sorry, the tax rate should not be 25%, it's 30%. This is an error because the pre-COVID time, the rate was 25%, but now we operate at 30%. So please note that, and apologies for that error. So 30% of the 800,000, get your tax payable is the actual tax liability minus the withholding tax credits to get the tax due. But I hope you understand the concept of withholding tax and why it does not amount to double taxation. That brings us to the end of the first part, the annual tax system. I know it's a lot and it might take time for you to understand, but I hope you've gotten the concept. It's an income versus allowable expenditure to find the taxable profits, apply the rates of tax, and pay the tax due from that. Now we go to turnover tax. So turnover tax, again, we are guided by the Income Tax Act. So this is a mode of accounting for business income that has been tailor-made for the Kenyan SME or MSME, because we want to simplify their mode of paying taxes. Many taxpayers in Kenya were saying the annual system is too complex. I need to have an accountant. I need to know what is allowable, what is non-allowable. They ask for a simplified system. And the turnover tax system is the answer to that. So this is a system that is legible, or the businesses that qualify are those businesses that have an annual turnover of between $1 million and $50 million per annum. Sole traders will qualify, partnership or companies. Remember, your turnover must be between 1 million and 50 million. Tax is at 1% of your gross monthly sales. The key thing to note here is that there is no deduction of expenditure. It's 1% of your gross sales. That means that, let's say you register for TOT in January and you make sales of 100,000. Your tax will be 1% of the 100,000. Come February, if something happens and your sales are zero for certain reasons, then the tax will be 1% of the zero, which is zero. But remember, you must file your return to communicate to KRA that for this month, I've not made any taxable sales. And you do that by filing your nil return. For the business income or for the business person who's registered under TOT, then this is a final tax, meaning that you don't need to pay for any other tax. And this is why we're saying this system is simplified, because all we need in your return is your sales, your gross sales, without deducting expenditures. If we come for a compliance check, all we're going to check is, have you fully declared your sales for the month? Returns are due every month on or before the 20th day of the following month. So what this means is the January return is due in February, the Feb is due in March, the March is due in April, and so on and so forth. So also, that's the key thing. TOT is a final tax at 1%. Return must be filed on or before 20th day of the following month. Remember, this is also filing and paying. So if you have some tax liability to pay, ensure you pay before 20th. Otherwise, you get some penalties that we'll talk about. So again, we said in the beginning that you can't be in both the system. You can't be in the annual tax system and the turnover tax system. So the exemptions that we're going to talk about are the taxpayers who do not qualify for TOT. Persons with business income below 1 million and above 50 million per annum, you do not qualify for TOT. You must file in the annual tax system that we talked about. For rental income, we have both commercial and residential rental income. For commercial property, you must declare your income in the annual system. For residential rental income of between 288,000 and 15 million per annum, we have a system known as MRI, where tax is paid at 10% of the gross rent. Any income outside those thresholds, that is the 288,000 and 15 million, filed under the annual system. Managerial, professional, or training fee, these are the incomes we said are subject to withholding tax, must be filed in the annual system. Any income subject to final withholding tax. So you find that there are certain incomes, for example, dividends that you earn maybe from a SACCO or from a fixed interest from a fixed deposit account. If it's qualifying, then the withholding tax deducted at source is final, meaning you don't need to account for this further. Differentiate between the cases where withholding tax is final and where it's not final. If you're in the business of providing managerial, professional, training services, then your withholding tax is not final. But where you have made an investment in a SACCO and you earn a dividend, or a bank and you earn some interest, then that tax that is deducted from the interest or dividend is final, meaning you don't need to account for it further. So here we have a note that makes it a choice for you as a taxpayer to decide which system suits you better. Of course, there are some businesses that are restricted, as we've talked about. They must be in other systems, like the annual tax system. But for any other business person within 1 million to 50 million who wants to remain in the annual system, they have been in that system, they like it, then they can remain in that. Those who register for TOT, they like this new system, it suits their business, then they can do so by ticking the obligation on their iTax profile. So that finalizes TOT, but we have some common questions that come up when you train on TOT. So I'm just preempting some of the questions that may come up. So one of the questions is, how do I register for TOT? So maybe you have heard about turnover tax today and you like the system, you want to register, then all you need to do is log into your iTax profile. Under your registration details, you're going to find tax amendment of tax registration details. You're going to find your tax obligation and you will tick the TOT obligation. When you tick, you're going to submit the application. It will create a task that will go to an officer. This officer is supposed to now verify your application and approve it. That means that when you get the registration on your certificate, it will have an effective date of registration. And that means that you must file your return in the next month, even if you have not made any sales. Remember, there's a provision to file a nil return as long as it is an accurate reflection of your tax affairs for that month. Do I still need to register for VAT if I'm TOT registered taxpayers? So you find that most of our taxpayers know of the TOT, a TOT that was there before. So forget that TOT, we have a new TOT whose thresholds are between 1 million and 50 million. So yes, you need to register for VAT. Because for VAT, if you're making taxable supplies of 5 million and above, you're required to register for this tax head. But in the types of taxes, we talked about direct taxes and indirect taxes. TOT is a direct tax you pay from your business income. VAT is an indirect tax that you collect as part of the supply chain that gets taxable goods or services to the final consumer. So this is not a tax on your business income. It is a tax on consumption, but collected and remitted by business persons. So I think, well, Grace, we're going to arrange a session on VAT just to clear any confusion that might be there about whether what is VAT and why do I need both TOT and VAT. But for today, remember, TOT is a direct tax, VAT is an indirect tax, and a business that qualifies for VAT must register. If you're below 5 million and you want to register for VAT, you're allowed to do so, but now you must comply with all the requirements of VAT. If I'm TOT registered, am I still subject to installment taxes? Installment taxes are in the annual tax system, so you're not subject to that because that's in another system. You're either in the annual tax system or in the TOT system. You cannot be in both. So you will not be subject to installment taxes. The next question, I can't see that. Just kindly move the slide down a bit. Do I have to go to a cyber to have my TOT return filed? Again, this is a no because it's a simplified return. And all we need from you is your sales for the month. So kindly, if you don't know how to do the return, we can train you on this. We also have tutorials on our website where you're able to see how do I file this TOT return. And all we need is your gross sales for the month. The system has the rates of tax at 1%, and then you generate a payment slip and make payment by your preferred mode, be it a bank or via M-Pesa. So that is TOT for you. And that brings us to the end of the theoretical part of the law, and now we're just going to look at offenses and penalties just as an overview of maybe some of the penalties that arise from not complying with what we've talked about. Late filing of income tax company or partnership returns, 5% of the tax due or 20,000, whichever is higher. Again, you said you must file your income tax company or partnership returns 6 months after the end of your accounting period. If you don't do that, you can see that there is high penalties on that. Late filing of individual income tax return, 5% of the tax due, or 2,000, whichever is higher. The individual income tax return is due on or before 30th of June, and you can file it anytime from January to June. So you don't need to wait maybe until the end or maybe last minute to file a return. Also, one key thing to note is that the 2020 return is filed in 2021. So what we are filing now is our last year's return, taking our income for the year, or maybe our pay-as-you-earn has already been deducted. So all we need to do is balance out that. You have your credits from your employer. Now we need your debit through your return. We have the TOT late filing penalty of 1,000 per month. In case you file your TOT late, then we'll see there's that 1,000. Late payment of income tax. Any late payment under the taxes we've talked about, 5% of the tax due and interest of 1% per month. So remember that you can avoid all this by paying on time. And if you're unable to pay, request a payment plan and we'll be able to facilitate you. Penalties and interest, okay. Next is the voluntary tax disclosure program. So this is a program that allows you as a taxpayer to disclose your previously undisclosed tax liability. You can move to the next slide. Your previously undisclosed tax liability. So what is happening here is you have an amnesty. If you have been in business and you know that you have some gray areas, you have some pay-as-you-earn or VAT that you've not paid, then this is your opportunity. Because when you disclose these liabilities, you get relief of penalties and interest. The program will be open for 3 years. It's open now. That is from 1st of January 2021 to 2023. And the eligible period is 5 years prior to 1st of July 2020. If you have those liabilities under pay-as-you-earn, excise, VAT, TOT, or any other tax head, you may disclose this and get relief. So when you disclose this in 2021, you'll be put on a payment plan, or any of the years, you'll be put on a payment plan of up to 12 months. In the first year, when you pay as agreed, you get 100% remission of interest and penalties. In the second year, you get 50%, and in the third year, you get 25%. So remember, this is available now. Apply, declare your income, and get the release as we talked about. Taxpayers under audit, investigation, or party to an ongoing case involving their tax liability will not be eligible. So that's where you are under another process, maybe audit, pending investigation by the commissioner, then that liability does not qualify for this program. So this is an opportunity for you to have a clean slate. Maybe you know of you want to start complying, or you learned something today and maybe you didn't know that I was supposed to be accounting for my business income. This is the time to do so. Next, so to avoid abuse of this program, there are some penalties for non-disclosure of material facts, and a material fact is a fact that affects your tax liability in a significant manner. So if before the expiry of your agreement with the commissioner finds out that you failed to disclose material facts, they're allowed to withdraw any relief granted, assess and collect any balance of tax, or commence prosecution. So again, you can avoid all this by giving the accurate facts and as information as accurate as it can get, and avoid any non-disclosure of material facts that affect your tax liability in a significant manner. So amnesties have been there before. Like, for example, we had an amnesty on rental income, and those who took it can tell you that you can trust this process, that after this program, especially this voluntary tax disclosure program, you're going to get a certificate, and this certificate is going to cover you for that period. Meaning that in case of future compliance checks, no KRA officer will come and open the same period. You produce it as a certificate that will show that this period has already been taken care of, and now you can continue with your business in peace. So that's we're almost at the end. I know this has been a long ride, but we're almost there. Integrity and access to information is our final part. And these are just the measures that KRA has put in place to enhance integrity. Of course, we know there has been issues, and KRA has been going through a transformation process, and we're going to see some of the measures that we've taken as KRA to ensure that you as our customer are satisfied and even able to approach us and make your complaints known. So these measures include automation of KRA functions. From the beginning, we talked about iTax. This is our online platform. We have ICMS, ECTC, DPC, custom systems with the purpose of ensuring there is integrity. Of course, with the automated system, it means there is a reduced person-to-person contact. The system can also do a trail audit that is able to check what our officers doing. So this has been done to enhance integrity. We also have a taxpayer's charter that spells out your rights and obligations as a taxpayer. This is available on our website. And this is your document, because as our taxpayer, we have agreed, these are our service level agreements with you. For example, if you want a certificate for a person with disability, we offer exemption certificates for the first 150,000 of their monthly income. Of course, there are requirements, and the taxpayer's charter is going to give you that, and also the timeline it's going to take. So download this document and use it to request your services. We have an intelligence and strategy office that oversees integrity in KRA, does lifestyle audits, vesting of staff, and investigation of staff and tax evasion. Again, also we have training of taxpayers. This is what we are doing now to ensure that you know there's a part that you can play in this and to give you the channels where you can do the same. We have investigation of staff and tax evaders. This is together with our I and ISO department, the one I talked about before, where now they engage with other bodies, such as the ethic and anti-corruption bodies, to investigate staff who may collude with taxpayers to evade taxes. We have a code of conduct as KRA employees that stipulates how we must conduct ourselves. We must uphold integrity, professionalism, confidentiality, and our core values: helpful, ethical, trustworthy, and competent. So in case we fail to do that, then we will need to, we will give you the measures that you can make a report. We have an anti-corruption policy that stipulates if maybe from the investigation we find that our staff are engaged in corruption, what is going to happen to them. We also have a gift policy. For example, you might engage with a KRA officer, they serve you well, and you want to appreciate them. Kindly note, they are not supposed to receive any monetary gifts. And so you should not offer any monetary gifts. And the non-monetary ones must be below, or must be of a value of 20,000 Kenya shillings and below. We have a whistleblower policy that protects anyone who provides information to KRA. And right now we have an online platform known as iWhistle, where you can report anonymously. Under there, we also have an informal reward system where KRA pays you 5% of the taxes recovered from the information given by informers up to a maximum of 2 million. Of course, if you use the iWhistle and you want to get the reward, you must now declare your name and your details. So you will not be able to receive this reward if you're anonymous. So you can use those systems to make any reports that you may have. Then we have the reporting mechanism. We have a floor that is 26 floor times tower. You can report there. We also have a hotline number 0726 984 668. Email corruptionreporting@kra.go.ke. And also you can write a letter to the Commissioner General. The Complaints and Information Center, CIC@kra.go.ke, has been set up to solve our complaints. Because from your complaints, as our taxpayers, our customer, we know where we are lacking. we know where our services are failing. For example, we know that waiver processing, refund processing are painful areas. And we know this because the feedback has come in. So use cic@kra.go.ke to give us feedback, to make a complaint, to follow up on your services that you've requested via iTax, and maybe you have not gotten a response. Use the cic@kra.go.ke and kindly quote your PIN number or the KRA acknowledgement number that you got when you requested the service. This enables us to trace your request on our system and facilitate resolution. So use the CIC for that purpose. And that brings me to the end of my presentation. I hope that you've understood what is expected of you as our taxpayer. And the key thing is to remember that the authority is interested in having you pay the fair amount of tax, not a shilling more and not a shilling less. So with that, I think I'll take it back to Grace for the next part of the session.
Thank you very much. That was quite enlightening, and I think quite a number of questions that are being asked. Allow me to just start off with Mary G's question. She's asking, will the question on PIN registrations be addressed? Yes, Mary, you've come a bit late. She talked about that when she began. And allow me to just repeat that she said it has been cancelled for now, right? Yeah,
yes,
it has been cancelled. So allow us to take a couple of questions. I know we are short of time, and always this session is brought to you by Atarah Solutions in partnership with Balcon Housing and Stallion Construction Company. We have a lot of questions. Oh my God. Let's see. Susan is saying, but they would like to know more about turnover tax, TOT. That has been answered, I believe. What is the process of applying for waiver for payee obligation imposed, yet the employees earn below the payee threshold? How long does the approval take?
Okay, so pay the registration of, okay, if you, let's say you registered for pay as you earn, it has an effective date of registration. And for pay as you earn returns, we expect that you file on or before 9th of the following month. So you're supposed to be filing because the obligation is there, even if there is no payee to pay. Remember, your return is your way of communicating to KRA. So in case you've not done that and you've been penalized, you need to visit your tax service office. It's on your PIN certificate, and they will facilitate you, because sometimes we know that this is an erroneous obligation, and so the penalties and interests that have arisen are also erroneous. When we can establish that, then this is going to be processed in due course, but of course, after you provide any documents that may be required from you.
Okay. Janki Patel, I believe this question was answered. How do I change my tax bracket from income tax to TOT? I was on TOT from day one when my accountant made an appeal to change it, it was rejected. I'm a micro business.
Okay, so before we had a TOT where taxpayers used to file on a quarterly basis, I'm assuming that's the TOT you are in. So to register afresh now, you need to file your return for the previous year and pay any taxes under the annual system. And then select this as an obligation in your iTax profile. You're going to get a task number, and an officer is going to process that and register you for the obligation.
Excellent. I hope, Mr. Patel, that answers your question. Michael Kinyanju is asking, I have registered a business name on eCitizen, and the thing is, I want to now have an ETR machine for the business name. What do? I cannot register a PIN for the business as it is not a company, and I cannot use my personal PIN as I am salaried. Please assist.
So you can, if you're in business, the law we have captures the scenario where you can have different streams of income. So you might be employed and your pay as you earn is deducted and remitted by your employer, and you can still be in business. So the system is able to accommodate both. So the only solution here is that you when you're filing your return, you tick that. There's a question that you're asked, do you have business income? When you say yes, it's going to open the profit and loss account, the balance sheet, and you're going to input this information. That is if you want to file in the annual system. But as a sole proprietor, you can have the TOT obligation and also the income tax individual, which captures your employment income. As for the ETR is applicable when you're VAT registered. And we said VAT is a tax that is collected by business as part of the supply chain that gets the taxable goods and services to the final consumer. For VAT registration, the law says that you must register for VAT if you're making taxable supplies of 5 million and above. When you're below the 5 million, you can volunteer and register for VAT. And you cannot operate the ETR without VAT registration. So note that the first thing would be to query, do I need this VAT? And when you decide that you need it, you tick it as an obligation on your iTax profile, submit the application, it will be approved, and now you must file your returns every single month and also charge VAT on all your sales. VAT is a whole tax head that has a lot of requirements, and we find that most taxpayers get into it without knowing what they're getting into. So get more information about VAT, understand the system, the filing of returns, the cost implication, and all that before you register, especially when you're below the 5 million threshold.
Excellent. We are going to have another session with Monica and KRA to discuss VAT and payee. So stay tuned in June. We are going to have another session discussing VAT and other taxes. So Anonymous is asking, I have a limited company which I opened 3 years ago and never generated any revenue. I file nil returns every last day of December. Is that okay? Please, yes or no, because of time.
Okay, it's okay. Okay. As long as it's an accurate reflection of your affairs for that year.
Judith Ndegwa is asking, is the levy deductions for catering 8%?
Levy deduction, that's not part of the taxes that we collect, so I might not be able to comment on that, but VAT is at 16%.
Okay. Peter Odor is asking, what about NGOs?
So for an NGO, we have exemption certificates, but this NGO must prove that it's involved in charitable activities that benefit the public. So there's a whole process of approval available on the Taxpayers Charter, so you can download that and see whether you qualify, provide the documents, and get the exemption.
I don't know whether it's my internet or yours. I didn't get the last part.
About the application,
yes.
So for exemption, you need to apply, and the requirements are on our Taxpayers Charter. What you do is download that charter, see the requirements, and apply for exemption, and you get a response on whether you qualify or not.
Okay. Purity Kinanu is asking, how do you know that a business is an SME to qualify for the 1% tax of sales?
We use the base of your annual turnovers, that if your annual turnovers are between 1 million and 50 million, then per annum, then you qualify for TOT.
Okay. Isaac Boyd, I wish to understand how to calculate tax for monthly pay as a retiree or monthly retirement benefits.
That is under pay as you earn. So I don't know if we will not be able to delve into that today, but of course we're going to have a session that is on VAT. Pay as you earn, and it will be more in depth on how to do the taxation on those types of income.
Yes. Allow me, our audience, to clarify that we have KRA with us every month, once a month, for more information on taxes and just to demystify for us and unpack for us these taxes and what they mean and how we can deal with them, because I mean, it's a compliance issue, so we might as well just deal with it now and forget about it, right? Tijo is asking, I'm in consultancy or training business. Do I need to register for VAT?
So if you're making, if the taxable income, in your case here, the consultancy income is 5 million and above per year, then you need to register for VAT, because this is a taxable supply under the VAT Act.
Okay. So how does one account for management fees below 24K to consultants?
So they are going to invoice you, so you pay them, and then when they are this is what they are going to declare in. It's upon them to now declare it as income. So you'll be okay, because there's they have offered you the service and you have paid them the amount that you're supposed to pay them. So no issue on the one making the payment.
So then the consultant, what happened to the consultant?
The consultant now will declare the income in their annual income tax return versus the expenses they've incurred and determine their taxable profit.
Okay. Anonymous, and I think this will be our second last question. Withholding tax on management fees is 5%. What percentage is the person offering through service to pay you?
What percentage?
On withholding tax on management fees is 5%.
Yes.
What percentage is the person offering through service to pay?
I don't understand the question, but for the withholding tax that is deducted at source is 5%. So when we come to our tax rate, the highest rate that we have is 30%. If you're an incorporated entity, now you're supposed to account for the rest, which is 25%, of course, after factoring your expenses in there. So for the business, every business person will pay depending on how they operate. Remember where we talked about the sole trader, the partnership or company, and how the different rates apply to all of them. I hope I've answered the question.
I think you have. Somebody is saying, why do we have to file pay again, yet the company remits the same every month?
Okay. So when the company deducts your pay as you earn every month, it's a credit in your iTax ledger. And when you file, it's a debit. So you're balancing our equation here. You're telling us the tax that has been deducted is the same as what I have. So this is good for you because you're assessing yourself. Remember, we said we have a self-assessment system. And of course, you can have other sources of income. You're able to declare that in your return. The filing of return is actually for you as a taxpayer to even rectify any errors that your employer might have made in when deducting your tax.
Excellent. It's 9:08. Janki Patel, we will not repeat the TOT answer because we are going to upload the recording on our YouTube channel so that anyone who has missed anything is able to catch on and at least clarify. I like the suggestion by Lisa Molo where she's saying, Grace, please create a Q&A session for Monica Peke, where we come in and just answer questions. I like that idea. I really like that. We are going to do that after we have covered VAT and at least we cover a few topics so that by the time we are coming for VAT, for the Q&A, it will be to clarify things here and there. So about tax returns, Eric Modomi, about tax returns. So anything about 2021, including salary, will be filed in the next financial year, confirm.
So your 2021 incomes, yes, will be declared in 2022. But now we need you to declare your 2020 incomes and any taxes thereof.
Okay, I like this question. What taxes are exempted for parents with disabled children and how do you apply?
So for parents and caregivers, that's a conversation that is ongoing, but for now there are no exemptions. But that's something that has come into the knowledge of KRA. But remember that we also work with the National Council of Persons with Disability to produce a better way of capturing the scenarios that as they occur in this area. But the person with disability themselves gets an exemption of the first 150,000 per month, and then pays tax on any other amounts above that.
All right. So this session is again brought to you by Atarah Solutions in partnership with Balcon Housing and Stallion Construction Limited. The last question will be Peter Odori is asking whether he can call Monica. please email me and I will be able to hook you up. Whatever question that may not have been answered, I can get you in touch with the KRA team and we can be able to structure answers. But as it has been suggested, we will organize a Q&A session for all of us so that at least most of our questions are answered. However, in June, we shall be discussing VAT and payee as a follow-up on the session today. Edna is saying, is there tax for donations?
So donations are a tricky issue because now you find that most people used to use that as a leeway to claim amounts, huge amounts as donations. So now the law is quite strict. And it says it's donation to Red Cross, AMREF, or any other body that has been certified by the president to receive donations, maybe when there's distress. So the laws about donations have become very, very strict. And you must now prove that this has gone to a certain body that is registered with Kenya to receive donations.
Okay. Someone is saying there are universities in Kenya that are not remitting paying. What are you doing about them?
So for any university that, or any taxpayer, not even just the university, who is not remitting taxes, we have a debt collection department. And this debt collection has methods of collecting tax. So there are agency notices, freezing of accounts, liquidation of assets, and such. But of course, we do not go to such measures unless now the taxpayer has become quite difficult. So we gradually engage them and try as much as possible to even put them on payment plan. Because remember, we cannot be killing the goose that lays the egg. So we must continually engage them, understand why they are not able to pay, and put them on payment plans that facilitate their continuing the business, even as we demand taxes from them.
Excellent, excellent. So we cannot finish the discussion today as it looks. So allow us, it's 9:13. Thank you very much for your patience. We've eaten 13 minutes of your time, but I believe you're getting value. If you have missed anything, we are going to, and you registered for this session, I will share with you the presentation by Monica on email, as well as upload the recording on our YouTube channel, hopefully by Friday. Today is Tuesday, yeah. Hopefully by Friday, so that you can be able to read the notes as you refer to whatever she was talking about. And in case of any questions, please feel free to email me and I'll be happy to share it with Monica. As we have said before, we are going to have this session again in June. So every once a month until we are happy, KRA and Atarah Solutions are saying, let us demystify taxes for MSME. So we got you covered. As always, this session is brought to you by Atarah Solutions in partnership with Balcon Housing and Stallion Construction Company. Asante sana, Monica. You have really, really helped us demystify those few concerns. And we are going to really focus on VAT because I have left out like 10 questions on VAT. So that then it will be our starting point in the next session. So asante sana for your support and partnership, and we continue doing this. Thank you, Kapula Mintito. We have giveaways. I think we will start doing the giveaways next week, so that at least our audience can start gaining by tuning in. So thank you, Kapula Mintito, for your partnership, and we will be doing your giveaways soon. Please check out Kapula Mintito on Facebook and Instagram and enjoy Mapocho Pocho. Ama Vipocho Pocho. Graphics Broadcast Media, thank you very much. Last week, you really sorted us with helping us go live on YouTube and Facebook. Thank you very much, our audience, for tuning in tonight. It's always a pleasure. My name is Grace Nzula, trainer and HR consultant with Atarah Solutions. I have been your host. Kindly like our Facebook page, Atarah Solutions. Follow us on Instagram, Atarah Solutions. Subscribe to our YouTube channel, Get It Right with Atarah Solutions, so that you can catch up on what's happening. See you next week, same time, same place, as we continue giving you value. Watch out for our next flyer. From all of us, it's good night. Asante.